Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 28th day of July, 2017, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen. Extremely strong finish with gold and silver as a 1-2 punch hits the market. Economic data as well as North Korea launching another test missile. Now to the board. Gold closed up solidly, $9 higher. Basis the most active. August contract closed at approximately $1,269. You can add another $3 on top of that for the October contract, and that is the contract month that we are currently long in. We'll talk about our trades as we get into the technical study section. Silver also closing up strongly higher, up 17 cents, closing at 1674.5. We are long that market from 1598. Now, on top of all of that, we had a dollar that continues to just be in an utter free fall, losing about 0.5% on the day, closing at 93.17. And we had a mixed message in U.S. equities, with the Dow closing up about 33 points and the NASDAQ and S&P closing marginally lower on the day. Traders, to say that today's upside move, sharp upside move, is significant would be an understatement. Gold has closed up approximately $9, $8.90 at $1268.90. That, of course, is basis most active August contract, and that's the chart that we'll look at. However, realize that we are currently trading the October contract. We went long at 32, and that market is now at 1272. So we've got about $40 in terms of net gains on that trade. We'll talk about the specifics of the trade in a little bit. But first to gold. The move today, as I said, was significant. Significant for a couple of reasons. And one of the primary things that we can say as we look at this market is the fact that for the first time since the market broke below this long-standing support line, and the support line is created by simply connecting the dots, so to speak, for these lows, carrying it forward. But since we had this breakdown and hit, in essence, a double bottom roughly at $1,200 per ounce, today's move is significant in that it broke back above that support line, which then became a resistance line, but it went through there fairly easy, kind of like a hot knife through butter, and we are destined, I believe, for higher pricing. We'll talk about that in a second. This entire week has been significant in that earlier in the week, we broke above the long-standing 50-day moving average. Last week, we had already broken above the 200-day moving average. And so this is the final area we really needed to take out. It's based on a couple of factors. The first factor we just talked about, which is this support line, as well as our 38% retracement. That is the second thing that is of key significance. And then the third thing is we did have a series of resistance areas based upon some previous tops here and a top at around 61, and those were taken out. This is the key area I'm talking about right here. Came in at around 60 to 61, and the fact that we have closed effectively above that tells me that the next real level of resistance really doesn't come in till about 1300. Now, we've had 2 attempts to breach that this year in terms of a record high for the year. So far, it's been 1300. We will have to see if the market continues to track higher, if the third time is a charm, and we see the market break above 1300. Of course, my recommendation is to maintain our current long position in gold. We just moved our stops up, but we will look to tighten them once again, either Sunday, Monday, or Tuesday, depending on the action we see over the weekend, to a more significant level to lock in even more of our profits on this current trade. That will go out as a trade alert via SMS text message along with our email sometime early next week. And that brings us to the second half of our current trade. We are long gold. We are also long silver. Silver, we are long basis most active September contract. That closed up 0.9% at 1672 today, a net gain of about 15 cents. To me, what is significant in this market, of course, is the fact that we have now broken above the 50-day moving average, and realize that silver is different than gold in that we're still reflective of this dead cross pattern in which our longer term 200-day moving average is still above the shorter term. So we would look for really some kind of a cross to come in here, and that golden cross would be a pretty strong signal. We would see the shorter term hook up, this kind of move down, and we would finally get that golden cross. However, what we can say in terms of significance, besides the fact that we broke and traded and closed above this particular moving average, is that we have effectively traded above the 61.8% retracement area. That comes in at around 1648. That is this line right here. In terms of our current resistance in silver, it's a little bit different in gold. We have minor resistance at about 1690, and then we have major resistance just above 17 at $17.11. Of course, we took positions on right below $16. We have also been trailing our stops up. So my recommendation for our current silver trade is to maintain our current long silver position, maintain our current stop, and as I said with gold, we will send out a special trade alert beginning of next week, raising these stops yet once again. And traders, most significant in today's action is a further absolute devastating decline in the US dollar index. Dollar index closing at 93.14. Net change, it lost about 57 points, or about 0.6% this week alone. Considering the fact that back at the beginning of last year, based upon the optimism just following the election, of course, we've got 2017 coming in right here, and that's just as it started to fall. Of course, the election occurred in between there, somewhere right around here, this being October. But this excitement about the potential for a revitalized economy pushed the dollar index up. Recent data as well as events has been moving the dollar substantially lower. Considering that it was trading at 104 last year, it's currently below 94 this year. We've seen a significant decline in the dollar index, losing roughly 10% in value this year alone. Now, in terms of what we're looking at, as you know, my daily subscribers know that I had an updated analysis of the dollar index. Our former target was 94 on the dollar index. We've obviously taken that out. We took that out last week, took it out with a vengeance. And so my sense right now is in terms of our next level of support, we have some minor support that comes in here right at about 92. You can see that in terms of historical reference based on a series of market bottoms that come in. And then major support, I believe, comes in at 91.5. 91.41 is the 50% retracement, and it's a rather large retracement going back to when the dollar index was trading below 80. This, of course, is back in 2014. Up to the top reached at the end of last year at 104, and that's where we're deriving these different levels. As I said, I expect further decline for the US dollar, and I would look for support to come in at around 92 on a technical basis. Traders, as I've said many times, it's all about positioning oneself to have an active and open trade if in fact events occur that will move a market in an anticipated direction. No one can predict how the economic report was going to come out, or the fact that North Korea fired its second missile test in a single month. These are events that we don't have any future knowledge of, and therefore the only way to really be able to take advantage of that type of scenario is to be properly positioned before it happens, and that's what I've always said. Because of that, we have accumulated more profits in both our gold as well as our silver trade. We moved our stops up once this week, and as I said during the study section, we will look to move them up early next week. This has been Gary Wagner, wishing you as always good trading. I'm so happy we were able to deliver that to you yet again another week. Have a great weekend. We'll talk to you on Monday. Bye-bye.